Welcome, everyone, to a Dose of Wisdom Real Estate podcast, where you could get your daily dose of wisdom on all things real estate related. I'm your host, David Stein, and today we have the privilege of having on our show Lauren Nadata. Lauren is the CEO at Build Insurance Group, and Lauren is a powerhouse that has turned Build Insurance into the go-to insurance agency for investment property owners. Specifically, she has built a niche in insurance for student housing. Lauren, thank you again for coming on the show.
Oh, thank you for having me.
Okay. So my first question to you is, how have you seen the property insurance sector evolve since you first started in the field?
Oh, it's changed tremendously. Like when I first came in, I guess like around 2006, it was a soft market. So like you could always get a deal. There was like a deal you kind of knew no matter what, if you touched it, you were going to win because
Right.
like rates were going down. And today we're in an extremely hard market, like by far the hardest market that's been in the past 15 years.
Wow. Okay. What was an interesting or challenging situation involving securing insurance, which you were able to successfully resolve?
The biggest challenges today are in coastal properties,
Right.
because rates are changing every day. Like I'll
Mhm.
give you a good example. We insure a bunch of multifamily we have a bunch of multifamily units in Mobile, Alabama. You know, I'm here in New York, New Jersey. We write a lot
Right.
here, but believe it or not, we've got a good amount of out-of-state stuff as well. And I can tell you, like this one group that we're working alongside, the past three apartment complexes that they've bought in the past year, we've had to, even though the assets are similar, they're Class B, they're similar unit count, et cetera, similar vintage, we've had to use different carriers for every single deal. So when
Wow.
you talk about like what's interesting and exciting, it's like here you think you know what you're doing and you're just going to do it again.
Right.
And the market is changing so fast that even going back to the carrier that you dealt with a month ago, they might have changed their appetite, you know. So like sometimes we have, I don't know, if I think about like a cautionary tale or something interesting that happened, I could think of, yeah, I mean, I would just say it's really a matter of keeping up with the marketplace and being a little dogged about finding solutions because the
Mhm.
problems are coming every day.
Okay. What was a notable situation where you were able to deliver a significant benefit by the client switching to your company?
Yeah, so regionally, I would say it's market fit more than anything. So we deal with two different things. I think in real estate, mostly everybody's looking at rate, they're looking at bottom line, but we try to encourage our customers to look at the actual coverage that they're getting. So for example, sometimes I'll look at a policy documents and it will say ACV, actual cash value. And we
Hmm.
kind of explain to the investor what that means. Well, hang on, if you've got, a lot of times investors will look at assets as how much money do I have in the deal? I just want to cover the money I have in the deal and make sure that I
Right.
can get that money out. But one of the things that we really encourage them to think about is the fine print and how the policy reads. How difficult is it going to be to get paid out on this claim? So for
Right.
example, if I make the math really small, if you buy a building for $200,000, but the cost to rebuild it in today's marketplace is $1 million, and you only want to insure it to $200,000, the insurance carrier doesn't want to be on the hook for the difference, right? Like if it, right,
Right.
the bank often wants replacement cost, the borrower wants actual cash value. And our job is to sort of help everybody come together and have a meeting of minds and get it done at a fair price.
Hmm.
So sometimes switching carriers is about price, but more often than not, it's about coverage. It's about value. It's about, okay, well, you have to spend this money. You might not want to spend it, but
Right.
can we get you something that's going to protect you better in the event you
Right.
actually ever need to use this?
And I'm sure there's situations where them switching to you save them a lot of money as well. Uh,
Certainly.
yeah.
Yeah, certainly, especially with the regional carriers. That would be like the best kept secret. I would say in commercial real estate is that we tend, if you have a Class A business building, you're going to do really well with the national carriers. But if you have a Class B building and maybe it's on the smaller side,
Right.
then I would definitely encourage everyone to look at the regional players. I mean, you always need to look at their financial stability depending on the market that you're in. But deals can be found. And I would say that's really where we save people money a lot of times, is using regional carriers.
Okay, good to know.
Yeah.
So, what are some common mistakes that you see property owners making in shopping for insurance policies?
Probably well, at the time of acquisition or once they already own the property?
Well, at both points, yeah.
Okay, so the biggest mistakes, I would say in general, the biggest mistakes are when you focus on price only. Full
Okay.
stop. Right? Because that's anything in the world. It's not just insurance. It's like if you're leading with what does it cost, and it's like, well, how
You
high
get what
quality is it?
you get
Yeah,
what you
you get what
pay
you
for.
exactly. So I would say that's always a problem. But I would say that the biggest mistakes that we see that cost people time and money are in the acquisition phase, where they look at the prospectus, they look at the information that the seller gave them on what their costs were, and then they underwrite their deal as if they're going to have the same cost, or they just spitball a random number like, I don't know, I think it should be $125. Like just really
Right.
random things that have nothing to do with the marketplace. It's a problem because people will get under contract, they'll have earnest money in the deal, and then they'll have completely unrealistic expectations, and then we're left to solve the problem. So, I've had many I'm proud that I've saved deals, but we
Right.
shouldn't have to save them. We shouldn't have to save them. Like if you would just ask us early on, we would tell you how to underwrite your deal. Like I'm always encouraging people to send, like when you have it, just you're putting it under contract, send it to us early before you even put the money in the deal. Like, let us do the research for you. It costs you nothing. And you
Right.
can really avoid costly mistakes or really challenging negotiations. Like
Well,
people,
that's great
yeah.
service that
Yeah.
you're
I mean, I would also say like one of the mistakes that people make in not underwriting the insurance early enough on is like if the seller gives, even if the seller gives you the policy, it pays to give it to a insurance broker to look at, because we can tell you if your lender is likely to even accept this type of insurance. Or
right.
like maybe the terms and conditions, like you're going for a Freddie Fannie loan or your whatever, like that worked for that guy who's had the property for 30 years or whatever, but like it'll never fly in today's marketplace.
Yeah.
Um, so I think that's probably like where we help people the most.
Right. Bottom line, insurance should not be an afterthought in the underwriting process. That's
Right. Especially in today's market where there's like less room to play,
right.
depending on where you're buying.
Right. Do you have any interesting stories of divine providence or Hashgacha Pratis that you could think of that you could share with the audience?
Um, I think Hashgacha Pratis and divine providence happens every day, but
Mhm.
it's about opening your eyes to it and accepting the fact that there was providence. Most recently, I would say we talked a little bit about Alabama, so
Right.
I'm going to go back to one of those deals that were particularly hard recently.
Yeah.
Um, we had we had a group that underwrote early and really went about things the right way. But
Mhm.
what happened was like right in the ninth hour, there were some issues with the loan and the insurance and what insurance to value needed to be. Sort of, we had done it very early on, and something needed to be changed to satisfy the lender. They needed a new line of coverage,
Right.
and the math just didn't work. It was literally the day before closing, and it was not viable. They're like, anyway, so someone from the group said to me, hey, Lauren, my lender really doesn't care. Can you just give me an invoice that says that we paid whatever?
You're right. Wow.
Whoa, can I just give you a paid receipt? It was just kind of like, like they talk about these moments that define
Right.
you. Like, who are you going to be? Are you going to be the person who falls? So all of a sudden I'm thinking like, I could, but should I do this? It's a whole other. So all of a sudden I'm
Right.
thinking like, okay, I can give you this thing, but what's gonna happen? What's gonna happen next? Like
What's the
maybe it's a
fallout?
right, like maybe it's a regional bank, they'll never catch it, whatever. Um, Suffice to say, I did not falsify the documents. And so I said like, well, there's got to be another way to work this deal, right? Like there's no way we're getting a better rate in the marketplace. So I ended up going back to the underwriter and saying like, I understand you can't lower your rate beyond where you are, but maybe you can just change the building value. And he says, well, I've got a minimum dollar per square foot. And I said,
Right.
okay, fine, just give it to me now. And maybe later on when you come and inspect, you can come back and say you needed a higher, whatever. Like when you really see the property, you can see it. They said, okay, let me think about it. The investors were obviously not happy that like they had a lot of money in the deal. And I said to them, I was like, guys, like if we falsify this, someone's going to jail eventually, or like eventually this thing is gonna, you're gonna get caught, or I'm gonna get caught, or whatever. It's just like not where I'm going.
Mm-hmm.
And I think for me, the moment of divine presence was being able to say like, we're not going there, even though I felt I had already fully negotiated the deal. Like we had already squeezed every penny out of it. And
Right.
it was an underwriter that we didn't have a ton of business with yet. So like, what was the likelihood that they were going to cut a deal that they shouldn't cut? And
Right.
sure enough, it was Erev Shabbos, and we all just said, okay, we're not, like so they were not so happy when they hung up the phone with me. And then 5 minutes later, I get a call back saying, Lauren, thank you so much for being the one that said no. Like, because Hashem runs the world, and like, whatever, I don't know if this deal is going to close or not, but like, let's just leave it and we'll see what happens. Sure enough, comes Monday morning, the underwriter changed the dollar per square foot. They lowered the premium. We gave a real invoice. They closed.
Wow. That is
Yeah,
a good story.
right. Is that not amazing? Like if
Yeah. Mhm.
Hashem didn't make that deal close, I don't know who did, because
Right.
and by the way, brought them the next deal and the guy wouldn't touch it. So I don't know, like the
Right.
next deal, very similar. And he was like, oh, I can't help it. Not that he couldn't touch it, but I'm saying his rates went up. He couldn't do the same thing again. So I feel like you talk
Right.
about divine intervention. I feel like what was the likelihood he would do it in that moment when people could have lost so much money?
No,
But it
that's
happened.
yeah.
Cool, right?
Yeah.
Yeah,
Good
yeah.
story. Okay, so my final question to you is,
Sure.
what are a couple of important tips you could share with our listeners about insuring their properties?
Um,
Or
I
some
don't know.
points?
I guess it depends on what stage in the deal flow you're talking about.
Mhm.
One thing I would tell you is that the notion of replacement cost valuation is changing.
Mhm.
I think it's not a secret that cost of construction has gone up over the past, whatever year and change. Inflation is real, and it's impacting every part of the deal flow, including insurance and including what the insurance carriers think is insurance to value. Something that I think is a really important tip that might not be on your radar. It's possible that you have a policy that's been renewing, and within it there's an insurance clause. There's a co-insurance clause, and the co-insurance clause is designed to be quid pro quo. Whatever the idea is, Mr. Investor, I know that you don't want to insure the full building value. You only want to insure to whatever money you put into the deal. I know that as an insurance carrier, I'm on the hook for the whole deal. So let's agree that as long as typically it's written with an 80% co-insurance, 80 to 100. So let's say an 80% co-insurance clause. They'll say, let's agree that if you're 80% accurate on your assessment of what it costs to build this building, I'll pay 100% of your claim, less the deductible. But
Hmm.
if you're less than 80%, and now you're at 70, 60, whatever, you're not really up to 80%, then I'm going to do to you just like you did to me. When the claim comes down, first the deductible is going to be out of your pocket. You knew that was happening, right? Then you're going to want to rebuild the building. Well, I'm going to pay you back the percent. We're going to reduce the percentage that you didn't pay me in premiums. You insured 50% of the building? No problem. I'll pay 50% of your claim. So I think it's a really important thing in today's market to be aware of, is that there are buildings that you meant to do the right thing on that typically insurance policies are written with like a 2% inflationary measure. That doesn't work in today's market anymore.
Right.
So there may be policies that you should be looking at just to make sure that you're within the range of normal that historically you wouldn't have to review. And because if the premium didn't spike so much, you wouldn't think about it at all. But today I would say you could have some coverage issues just based on the marketplace.
Okay.
Does that help? I hope.
Yeah, it definitely helps me.
Okay.
No, it's great advice. So, well, thank you again for coming on the show. I really appreciate it. And I'll have you on again sometime.
All right. Thank you so much. Have a great day.
All right. Have a good day.